Welcome to another episode of Equity Street, where we provide the roadmap to property wealth. We're answering the questions of real estate investors across the country, and of course, I am joined by one of Australia's leading property experts, Matthew Bauer, to answer your questions. So let's get straight on into it. All right, this question comes from Wayne and Donna, and they've said, will the upcoming federal election affect the Australian property market?
Yeah, good question, Wayne and Donna. And I think this is one of many on everyone's lips, as it tends to be every time an election comes around. There's promises from both sides of the political landscape as to what they will and won't do with regards to negative gearing or property affordability or anything of that nature. I think there will be an effect for certain people, as there always is. And one of those, I guess, is going to further support pricing and increases in availability across certain segments, but particularly when they're making promises around, which they already have been doing, the extension of the first home buyers deposit scheme and I guess increasing the threshold of qualification for that. So the intention is there, I guess, from a political standpoint, to try and get more first home buyers and owner occupiers into the market. But in some respects, I think it'll have the adverse effect and continue to sort of push prices higher. And whether it has the desired outcome in terms of affordability, being more accessible to a greater number of people, that will remain to be seen. But in terms of an investing landscape, look, I think it's business as usual, to be quite honest. The conversations of past election campaigns around abolishing negative gearing or imposing capital gains tax on certain homeowners or the sale of certain properties there seems to be well and truly on the back burner for the time being. So I think they've got far greater motivations from an election point of view to be worrying about that. So yeah, look, I think prices will still be maintained because there's an effort to try and get more people into the market. So because of those incentives, but election per se, no, I can't see too much changing at this stage.
And Matt, would I be right in saying that unlike 2019, obviously, if we cast our memory back, which was a very property-dominated election in terms of policy focus, there's not really any of that in this election, is there? So both sort of parties have agreed to leave it where it's at. Therefore, as you mentioned, sort of business as usual.
Yeah, I think so. That's right. It was used as an election vote-winning tool, albeit a fairly shallow promise last time around from an election point of view, and it was pretty quickly scrapped as even a campaign item at that particular stage. But it'd be a brave political party at this point in time to start messing with any elements that property investors providing an increased pool of available properties for rent, particularly in the environment where we've got record low vacancies in a lot of major centres across the country.
There you go, Wayne and Donna. They're very, very thank you. Yep, we'll cut that bit out. Cool.